with
Thank
all of
you.
that detail. And good luck to you and the business. Well, the market is at 18. You saw a sharp dip, but we're seeing a bit of a reversal emerge right now. I mean, you'll be able to see that on the Nifty intraday, almost back at the day's high, 18,313 that's the one I'm talking about. So it's looking pretty healthy despite the pullback we had over the last 10, 15 minutes or so. But I think we have the management of Motherson waiting by.
Yes, Samvardhana Motherson, or SAML as it is called, reported a very good set of numbers. The order book has gone up 13%. The share of electric vehicle OEM components has risen from 27% in FY22 now at 37%. So, of course, it's a higher margin business for them. And the EBITDA has also gone up for them about 50% or so compared to what you saw in the last year. We have Vivek Chaand Sehgal, who's the chairman of the company, joining in. We also have Kunal Malani, who's the CFO of Samvardhana Motherson, who's with us. Gentlemen, morning to both of you, and congratulations on a good set of numbers. Mr. Sehgal, I want to start with you. Performance has improved across all your key business segments in Q2 in what was a difficult quarter. Across your segments, whether it's wiring harness, mirrors, polymers, your emerging businesses, where are you seeing the maximum amount of traction now?
Thank you. I think, first of all, it's important to understand that what we were saying in the first quarter is now showing the truth. This thing we have discussed a lot with the customers, and price increases and all are in place for this current and for the future also. Also, I think the teams have done a great job in getting very focused on this particular issue. And that augurs very well for the coming third and the fourth quarter as well also. Third quarter is traditionally our, the September end, this thing is always a little bit weaker because of the holidays and all that. So the board actually congratulated the team for a great job done. I think all our products are going to the entire car, but so very difficult to say which one is going to do better. But I think all of them are going to be doing very well.
Okay. Since we have the CFO with us, would be great to get him in and talk about some numbers as well. Kunal Malani is with us. Kunal, the revenue run rate has been pretty solid. I mean, if you look at the bar chart, 18,260 crores is what you did in Q2. On an average, you've done about 14 to 17,000 crores in the preceding 4 quarters. Will this run rate improve a lot more because the order book has gone up as well? What's the executable orders in the second half of the year, and what can the growth look like?
Absolutely, Sonia. Thanks. Great to be on CNBC. Number one, the drivers to the revenue side is threefold. Number one, I think the industry itself has done well. You saw around 21 odd million vehicles getting produced in this quarter. After a long time, supply chain elements have receded, and that has allowed this production to happen. And we have been a beneficiary of that as one. Two, the fact that our products are both product agnostic at the same time are technologically advanced has enabled these product lines to actually feed into the premium end more. And with the premiumization that we have seen happen over the last, I would say at least 2 years now, we have seen that the growth in premium segment has actually been much higher than the base segments. It's also been a lot more resilient to any of the interest rate cycles, etc., that have been impacting the mass end at more levels. So that is, and with our product mix being more catering to the premium end, has allowed us to, in some fashion, outperform the market in that way. And finally, look, our order book this time you would have seen has grown by 13% from 16.1 billion to 18.2 billion. That's the orders which are not in production right now. And for the first time, we've also released what is our total book business, which is 33.9 billion, which will get executed over a period of 5 odd years. And that gives you a lot of revenue visibility on the SMRP BV side, which is reflective of, again, potential growth as we move forward.
Sure. So if you can just help me with one number. On the margin side, you're sitting at about 7.7% margins now, Kunal. Given that you have a higher share of electric vehicles in your overall segment, and you have written in your conference call, mentioned that pricing and realization is on the higher side for EV products, Can you at any point in time get to 10% margins in this fiscal itself?
So you know enough. We do not really talk about margins. But having said so, look, first of all, it is 7.9%. That is the EBITDA margin. And when you think about EVs, yes, there's a greater level of content that goes into EVs, and that's why it typically is a more technologically advanced product that gets embedded into many of these vehicles, which should help in improving the absolute value. That's the piece to focus on, because content increase is not necessarily everything that we'll be making, but we will get revenues and margins from it. So the absolute should certainly be improving. The margins can move up or down depending upon commodity prices and a whole host of other contents that go into it.
Hi Kunal, good to have you on the show. Let's try to get a number out of you on debt then. It's holding at around 8,500 crores. What's the trajectory on that? If you could give us a sense, say in the next year by FY24, what does that number go to?
So I would say...
Give us some hint at least, Kunal, some kind of a number.
Yeah, thanks for pushing it. But look, I'm giving you a directional perspective and give you a sense of it. We are at 8,500 crores. With both the businesses ramping up, better profitability, and most importantly, a lot of the debt that we have today is driven by working capital expansion. If you would have seen our presentation, it showed in the pre-COVID versus post-COVID levels, we are carrying nearly 2,000 crores of additional inventory. And I'm saying just inventory, the additional working capital is getting played out in multiple different ways. So directionally, as some of the supply chain issues recede, we should expect this to certainly get back into cash. And at the same time, with things looking up, hopefully with our order book where it is, and if other things and other uncertain events don't happen, I think we should be generating significant amount of cash from our operating businesses as well. So we will be on a deleveraging path. CapEx is also, if you would have seen, it's fairly contained. This quarter we did, this half year we've been around about 850 crores. The guidance was 2,500 plus minus 250. We will likely be at the mid to lower end of this range in this financial year.
Okay.
So all that augurs towards the fact that directionally we should be deleveraging. Now, the piece on supply chain is the big one for sure. And that is a little bit unknown just given the environment. But
sure,
as it gets more stable, yes, we should see the reduction happen.
Okay, the supply chain issue is something that's, it's a bit of an uncertainty. But Mr. Sehgal, are you seeing any early signs of a demand slowdown, either in Europe or in the US? I'm asking because of the inflation pressures that are creeping in there. And we've talked about this in the past as to how escalating energy prices have also put a lid on the growth there. Are OEM schedules hinting towards any slowdown at all?
Not to my knowledge. In fact, all our factories, all our companies are, if they produce even 1 or 10 more cars, that's welcome. The customers are for sure looking very, very positively. And the demand, I don't see any slowdown at all.
Okay. Is it also a good time to for inorganic opportunities to come your way, given the recessionary trends in the Europe and US? Are you getting businesses at better prices, and do you hope to close something within the next few months?
Definitely, we are looking at many companies which have been referred to us by the customers. Look, it's a little difficult still. Travel rules are not that 100% clear, but our teams have to go there, meet the people, management discussions and all that thing has to happen. So it takes time. The last acquisition that we did actually took 2.5 years of COVID times, and then also it happened. So I think all these things are around the corner. That would be one reason why our debt, if it does, would go up. But otherwise, the debt would be down, as Kunal said.
Okay. One final question then, if you can talk about the progress in the non-automotive segments that you cater to, whether it's aviation, medical, logistics. Any major improvement that you've seen there?
Yeah, definitely. I think 1,750 odd crores has been done by those divisions. But it could have been better. But I think in the coming quarters, coming years, you'll find they're doing very, very well because they've already exceeded what our expectations was. So that's very good.
Okay. Kunal and Mr. Sehgal, thanks a lot for joining and appreciate your thoughts. That's the management of Samvardhana Motherson talking about how things have picked up quite a bit and they're not too worried about the higher debt. But a lot of stocks in focus this morning. So let's do one thing. Just pull up the chart of Nykaa. There's a big move that's coming into Nykaa this morning. I think it's a double-digit rally. So it would be a little helpful to get that chart up for you. It's come back in a big way. Look at that, 16% rally on Nykaa now at 218 rupees. But let's do one thing. Let us take a quick break. On the other side, Mitesh Thakkar will join in for some technical trades. Stay with us.